Okay, we got a couple more people waiting to get in. So while they're waiting, thank you all for joining us this afternoon for our presentation on reverse mortgages, the good, the bad, and the reality. My name is Nia Murray. I am the programs coordinator with Neighborhood Recovery Community Development Corporation, and we want to welcome you to today's presentation. Today, joining us, we have our presenter, Ms. Sherry Young with Credit Coalition, who is a certified HECM or home equity conversion mortgage counselor, HUD certified, who's going to be providing the information for you all today about all the ins and outs, the pros and cons on reverse mortgages. So again, we want to thank you for joining us this afternoon. Reverse mortgages is something that tends to get a lot of bad raps from a lot of people. We know that there's a lot of social media information that's kind of out there that kind of tells people about reverse mortgages and what have you. But we wanted to make sure that people receive the actual information that is needed and what's relative to uh, how reverse mortgages actually work and what is the good and the bad about it and what is reality and to know that everybody's situation is not exactly the same. Not everybody gets a reverse mortgage for the same reason or for the same purpose. So it benefits different people in different ways depending on what was the purpose for their intention of getting a reverse mortgage. So, but there's a lot of information that everybody needs to know, even when they're considering reverse mortgages. So we have a variety of different workshops that are offered each month through our collaboration also with the A Month of Service, which includes 8 other different organizations. And we come together every month to try to give as much information to the communities that we all serve relative to asset building, asset protection, and the maintaining of generational wealth and community empowerment, like information about reverse mortgages and how they work. So we're going to get into a lot of detail about that and have a lot of great conversation about it. So this is your opportunity to ask whatever questions that it is that you have as it relates to reverse mortgages. However, we do caution that we try to get you to ask questions in the most general way that you possibly can, because we do record our session. We also broadcast live on our social media platforms. So we want to try to protect your privacy as best as we possibly can. So we ask that you don't divulge any personal detailed information about where you live, your information, your mom or your father's reverse mortgage, or you don't give us any of those kinds of details. We do encourage you to reach out for more one-on-one if you are in need of reverse mortgage counseling. And I believe Ms. Sherry is going to, there's a couple of other organizations around Houston that are certified reverse mortgage counselors. Not many, but there are a few other that are HUD certified counselors that are around the city of Houston that we're going to give you information about for you to contact them as well if you do have specific questions about your specific situations. But again, try to keep your questions to be as general as you possibly can. So again, there's a lot of information. Please feel free to either type your question into the chat or you can unmute yourself, share your information, raise your hand. There's a raise your hand button if you want to raise your hand and then unmute yourself, whichever you're more comfortable with. For the folks that are joining us online, I am monitoring the social media channels, so please feel free to type your questions into the comment section, and I'll make sure that it gets read aloud at the end of the presentation as well. I know there were a couple of questions that were emailed in advance. So I will definitely make sure that those questions get addressed. Ms. Sherry did just put her email address for folks that may have questions in the chat. So for those folks that are joining us online and they can't see the chat, we'll make sure that her information is read aloud at the end as well, so that you'll have that contact information. So without further ado, we're going to go ahead and get started and have Ms. Sherry Young with Credit Coalition go ahead and introduce herself and get started with our presentation. So thank you very much.
Thank you, Nia. Thank you for allowing me to be here today. Hi, everyone. I'm Sherry Young with Credit Coalition. I'm the Executive Director, Educator, Counselor at the Credit Coalition. We are a HUD-approved housing counseling agency housed here in Houston, Texas, but we serve for reverse mortgage counseling. We serve the state. I will share with you a couple of handouts. Nia, said your name wrong,
That's
Nia.
okay.
I combined Nia and Murray together. Um, I have some handouts that Nia's going to share or has maybe made available to you already. So if you haven't received it, don't worry. She's going to forward those to everyone who's participating today, correct?
Correct.
And in that first packet, there's 22 pages. I do provide the list of, and I'll share my screen as we talk. But I did provide the list of HUD-approved housing counseling agencies that offer HECM counseling. That's the FHA loan, the home equity conversion mortgage, the HECM, the few agencies across Texas. So, Nia, I don't mean to bust a bubble, but there's myself here. Money Management International has, we both have two HUD ID numbers. So it looks like there's four agencies in Houston, but there's really only two of us.
Two. Oh, wow.
And the rest are in the Dallas-Fort Worth area. And not all of us serve only Texas. Some serve across the United States. Some are very specific in their area. But I'll share the HUD website with you along with the agencies that are housed in Texas. So
I'm
you
sorry. I'm sorry. I thought there were at least three of you, but I guess not.
two are me and two are MMI. So yeah, so it's quite interesting how HUD gives us different numbers for different pieces of what we do. So, with that said, I want to start off with you understanding that I'm not here to sell any product. We don't sell. We don't talk you out of a loan. We don't talk you into a loan. We don't tell you who to use or not to use if you're going to apply for a loan product. We're here to provide unbiased information on the good, the bad, the pretty, and the reality. I like that, the reality. I usually say the pretty and the ugly about reverse mortgages because one person's, as I say, one person's beauty is another person's, I need to fix up myself some. So again, it's different, as Nia was saying, it's different from case to case, person to person on why they are applying for a reverse mortgage, why they are using a reverse mortgage, and in some cases, why they think they hate the reverse mortgage. So, um, I don't know. I haven't seen any questions that you shared initially, but questions that were shared with you. But as we go through today, through our presentation today, I encourage questions along the way. I'm not going to ask you to put a pin in it and put it in a parking lot. If a question comes up, if it's something that's not in my part of the discussion, if it's a lender specific question, then I'm going to refer you back to a HECM lender, a home equity conversion mortgage lender. And they would be answering specific lender questions where I am a greater picture approach as a counselor. So that's what we'll do. All right. So what I'd like to do is just, I guess I could start out. If you don't mind, Nia, can we ask, does anybody have a question to begin? What's a burning question you have? Because I want to make sure that if you're thinking it, someone else is probably thinking it too. Get it out there.
Indeed.
Anyone unmute yourself or anybody type something in?
Well, there were two other questions that were sent to me about the fluctuating rate of a reverse mortgage. Can you ever contest those? And how does the interest rate actually work for a reverse mortgage?
All right, so the reverse mortgage, the HECM, the home equity conversion mortgage, the FHA loan, there are three types of FHA HECMs. One is a monthly adjustable, where the rate does move with the market every month. It follows the 1-year T-bill, the 1-year constant maturity treasury. And so that rate moves with the market daily. But once you become the owner of a reverse mortgage, it's going to move in a monthly manner. And so whatever the rate was the previous first of the month becomes the rate for this following month. It adjusts once a month. There's also an annual adjustable reverse mortgage loan and an annual adjustable loan. And the annual only moves once a year. It's again tied to usually the 1-year T-bill. It moves only once every 12 months. And so you're locked in for 12-month periods. So if the rates fluctuate month to month, day to day, but actually moving month to month for the reverse mortgage on a monthly adjustable, this one's going to stay, it's going to be locked into that rate for 12 months. And then in the future, 12 months, whatever the rate is, the month prior to that anniversary date will become your rate for the next 12 months. There's some benefits with the adjustable rate. Oh, I'll give you the third one. There's a fixed rate loan. A fixed rate, the lender decides the rate, whatever the market rate is for their entity, their company, they're going to decide the rate. It's fixed. And what we've been seeing in recent years that the fixed rate loan is much higher. The interest rate is much higher than the monthly adjustable or the annual adjustable. And the biggest difference, I would say, between the annual adjustable and the fixed rate does not have a line of credit. The fixed rate requires you to draw all one-time funds. Whatever funds you're drawing is available to you. If you don't choose to take all of the money, then there's no money left to draw out. Instead, it stays in your equity. So each of these three loans, whereas the two adjustables allow you to have a line of credit, which means you're not obligated to take all the proceeds up front. If you're someone someone that's receiving public assistance, the public assistance, SNAP, if you're on SSI, I'm sorry, my friends are here with me today, and she's going to talk. But if you are receiving public benefits, Medicaid, then you have a benefits asset test. You're not allowed to have more than so many dollars in your account at the end of the previous month. And if you all of a sudden drew down more than 2,000, more than 5,000, more than 15,000, whatever allotment you have, and you didn't spend it down, then you're going to lose those benefits. And then you'll have to reapply for the benefits once you've exhausted your funds to be within the asset test for the particular benefits. So the pretty thing about the adjustable rates is you don't have to draw it all down. You can draw it down in pieces, the amount you know you're going to spend during a period of time. And then if you find that, oh my gosh, I drew down 5,000 and I'm not allowed to have more than 2,000 in my bank account or in assets at the end of the month, well, then I can pay myself back. I can pay some of the money back to the reverse mortgage so that I don't jeopardize my benefits. And if you're not receiving benefits, this may not be something that you think about, but maybe you have a friend or family member that hasn't told you that they're on Medicaid or that they receive SNAP. Maybe it's a conversation you can just have with them to remind them that, if you are thinking of drawing down a lot of money, just make sure that you're not receiving any type of benefits that the monies will jeopardize as far as assets. So that was a long answer to the question that I don't know. Yeah, it was all about the different interest rates. You can't negotiate. No, you can't negotiate the 1 year T-bill. But what you can negotiate, and we'll talk about this in a little bit, but what you can negotiate is a fee that they add to, or one of the costs they add to the reverse mortgage calculation, monthly calculation, and that's the lender's margin. The lenders are in control of their margin to calculate your interest, to determine your interest. They take the lender's margin, which can be anywhere from the low 1% range up to, I've seen as high in the 4% range. Then they add that to the 1 year treasury note, the 1 year T-bill, and those two together become your rate. And what moves with the market every month, the margin side is locked in, but what moves with the market is that 1 year T-bill. And there's no way to stop that because that's the nature of the note. The other real pretty benefit, I'm talking pretty things here first, of the reverse mortgage is it's a loan on your home. It's a home equity loan against your property where you're not required to pay back a principal and interest payment every month. But you must keep your property charges paid on time. That's property taxes and insurance. And if you're in a mandatory HOA, that has to be paid too. So the difference between a traditional home equity loan, you go to your bank or credit union, you borrow against the equity of your house. In Texas, we have real strict guidelines on how much you can borrow with a Texas home equity product or a Texas HELOC, home equity line of credit. And with the reverse mortgage, It's not just a percentage. It's not say, okay, I can't have more than 80% like a traditional home equity loan. I can't have more than 50% of the value of my home if it's a HELOC, a home equity line of credit. The reverse mortgage doesn't work that way. The reverse mortgage, to calculate how much you're going to be able to receive, they use, if you're married or there's someone else entitled to your home, they'll use the age of the younger of the two of you. They'll use that interest rate that we talked about, the well, actually, it's going to be the 10-year treasury, the 10-year treasury note, and then the value of your home based on an FHA appraisal. They put those numbers into an equation and it spits out an amount they call the principal limit. That's the max you can work with. From there, they let you finance your fees. You don't have to pay out of pocket for your fees, except for possibly an appraisal fee. Most lenders require you to pay the appraisal yourself once it's ordered by the appraiser. It's ordered through a service. The service will contact you. They'll tell you what the fee is and who's coming out. It has no, they don't touch the lender themselves, but any other cost, they roll it into the loan. So you finance your fees, and then you are allowed so much available to you. From there, if you have a mortgage on your home, they'll pay off the mortgage. If you have your home, your property taxes in deferred status, I don't know if anybody here has benefited from the over 65 or older or the disabled exemption deferral process with the county. One thing I could say, or county or school district, wherever you are living in Texas, if you have deferred your property taxes, you cannot defer property taxes with a HECM, with a reverse mortgage. It will not allow that. So that property tax bill will be brought to current status. Again, if it's deferred, it'll be brought to current status. So that's going to be paid out of the proceeds of the reverse mortgage before you get any money. And then after the fees are financed, any mortgage lien is paid off, because you can't have any other mortgages on the property. And if you had any property taxes in deferment, those are paid off. Now, what's left over, you can touch a certain amount the first 12 months. And everything else, if there's money still available after that first 12 months calculation, the rest of it's waiting for you in a line of credit to be drawn down as long as it's 12 months and 1 day later. So the reverse mortgage provides us a way to use our equity now while we're alive and in the house, and not have to make a monthly payment, not required to make a monthly principal and interest payment as long as I keep my property taxes and insurance current. HOA. I have to live in the house as my principal residence. My husband and I, this year, we've married 49 years. And so if we decide to take out a reverse mortgage, the reverse mortgage protects both of us in our house, because it allows at least one of us must be living in this home as our principal residence for that loan not to be called due and payable. So if I died first and my husband is still in the house with with the reverse mortgage, he can continue to age in place. Now, let me tell you the bad part, or some of the ugly sides. I hear from clients calling me. They've been married a long time, like myself. They've had their reverse mortgage for quite a few years. The reverse mortgage is a rising debt, falling equity loan, rising debt. Every month I don't make a payment because I'm not required to. Interest and a mortgage insurance premium amount is added to my loan balance. And my loan balance grows and grows and grows and grows and grows. If my home doesn't appreciate in value as fast as my interest accumulating on my loan, then it could be by the time I am in my upper 90s and I pass away, now my husband has the house by himself, it could be that maybe we don't have a very big tax bill. Maybe we have a zero property tax bill because of our 65 and older exemptions. That was provided to us when we turned 65. So we're talking years in the future here. But now it's time to pay the homeowner's insurance. My husband may have needed my income, my Social Security, if I had a pension. Maybe that pension died with me. My Social Security died with me. Now, if he earns If his Social Security income is lower than mine, then he'll get the difference between the two of us, so for those spousal benefits. But if his Social Security is higher than mine, if his Social Security check was more than mine disappears and he doesn't see anything from me. And so now the question will be, here he's in his 90s. I'll use 90s as an example because we're already in our 70s. So I'll say in the 90s, and now he can't afford to keep the property tax. I'm sorry, he can't afford to keep the homeowner's insurance paid. And if there was any property taxes still owed in an annual basis, he doesn't have the funds to pay that. Well, he's going to be required to keep that homeowner's insurance paid and active, because if he doesn't pay, if he lets the insurance lapse, then the reverse mortgage servicer is required by HUD, it's part of the FHA loan, they're required to place a forced placed insurance policy on the house, which is a very expensive insurance. And they're going to send that nice little letter out and say, there's been a mistake because we don't have an insurance policy that's been renewed on your property, Mr. Young, in this case. And they'll say, if that's been a mistake, please send the insurance binder. If it hasn't been a mistake, we have already placed a forced place insurance on this home and you owe us. You must bring it current, and they'll give you 30, 60 days to pay that bill and get your own insurance and pay the portion of homeowners insurance that they're covering until you get your own insurance. And I've visited homes. One was in the news quite a few years back, but her insurance had was not renewed because after a storm, she didn't, whatever happened, the insurance paid, but the roof wasn't put on. And then the insurance company came back out and said, we need this roof in. She didn't have the money, so they canceled her policy. And then she had no policy. Then the reverse mortgage lender placed a forced place policy on the house because that's a condition of the loan. And it was a big mess. So anyway, don't, if you have someone that has that situation, or you've heard a story that someone's saying, first call they need to make is to the servicer, the company they're receiving your statements from, and let them know okay, I'm shopping for insurance, or I have insurance, it never lapsed. And then they're going to ask for the insurance company's information. So, and then you're going to get the mortgagee clause that you have to give to your insurance carrier. They'll add that to the insurance binder. A lot of words here. But it can be remedied. It's just sent right back over to the reverse mortgage servicer, and then they know, oh, this insurance never lapsed. That policy they placed on the house is backed out. You don't owe anything extra. But if you don't have the insurance and they place a forced place policy, you owe however days, weeks, months of that policy until you get your own. And if you don't get your own, they'll call the loan, they call the loan due and payable. They can actually foreclose because you're in violation of the deed of trust with not keeping the property charges, the taxes or insurance paid. Yes, Mia.
How, take us from the beginning. How does a reverse mortgage work? How do you apply for it? How do you qualify for a reverse mortgage? What's the process?
Okay. So I get a lot of calls from people that they saw it on TV. The guy with the mustache,
Tom Selleck.
Tom Selleck. They tell me
Hmm.
that Tom Selleck told them that they can qualify for or that there's a reverse mortgage is available to them. And I laugh about it with them. And I said, when Tom comes to your house, please call me because I'll drive. I'll drive over there because I want to meet him too.
That's
But so
Magnum PI.
yeah, so Mr. Selleck is probably not going to come to your house. But with that said, there's some other stars that also promote them. But you would reach out I always suggest folks to reach out to a lender of your choice. As a housing counselor, we cannot give you names to call. We can't even give you 3 names, 5 names, 7 names. The only thing I can do is I can refer you to the FHA website, where I can walk you through how to find the lender list of lenders who've closed at least one reverse mortgage loan, one HECM in the state of Texas in the past 12 months. So that's the only list I can provide you. I can share with you how to find that lender list. But if you call someone on the web or from the TV or from the radio, they may ask you for your birthday. If they're gonna give you an idea of what might be available to you, they're gonna ask you, okay, your birthday between you, if you have a spouse, anybody else entitled to your home, they're gonna ask you for those birthdays. In Texas, it's very difficult to get a reverse mortgage with a what they call a non-borrowing spouse. A non-borrowing spouse is someone who's under the age of 62. Other states across the country allow that. FHA just says you just have to use the age of the younger of the two of them, of the two of the applicants, the husband, if this is a husband and wife, use the age of the younger of the two of them to do the qualifying. But in Texas, because of our community property statutes, most lenders, I haven't found anyone in the last 10 years that's willing to do a non-borrowing spouse loan, meaning your spouse lives with you, this is your principal residence, you both live in the house. It just so happens your spouse is under the age of 62. So you both need to be 62 or older. You need to have a home. If you are going to use a reverse mortgage on your existing home, you have to own a home. That doesn't mean you have to have it paid off. You could have a mortgage on it, but in most cases, the mortgage has to be pretty small because, again, they take the age of the younger of the two of you, the value of the home based on an FHA appraisal. They use an estimate. A lot of folks, they'll ask you, what do you think your house could sell for today in present condition? What could it sell for? And you go, oh, I think it could sell for, you know, 78,000. And when people tell me that, I said, I'm not in Houston anymore. You're probably going to have to add a couple of more numbers to that because you might think your house is only worth 78,000, but it's probably closer to 178 or 278, somewhere in that range, higher than 100,000, most likely in Houston. Okay, it must be in good shape. It has to have a good roof. You can't have any peeling paint or rotted wood. The foundation has to be good. There can't be any pooling water. So when it rains, if water rolls away from your house instead of into your house. They're going to check it for health and safety issues. So they want to make sure that the house is in good shape, that it's a place you can age in. That's the whole purpose of the reverse mortgage is a mortgage to allow you to use your equity but age in place. Means you'll live there until you pass. If you want to sell the home, you can sell it at any time. You just have a mortgage lien against it. That is a rising debt loan. Every month, interest accumulates, just keeps growing, growing, growing. So you have to keep that in mind. All right, so I call around. I maybe I talk to some lenders. They may give me an estimate, but what we're hearing a lot of them will say is you need to reach out to a HUD-approved housing counseling agency that provides HECM counseling. Talk to the counselor first. And if you hear that from them, it could be because whatever numbers you gave them or whatever you told them about your financial situation, they may have thought, well, maybe we need to let them talk to a counselor first, a HECM counselor, to get an idea of what might be or not might be available to them. If you then reach out to a HECM counselor, most lenders will give you the phone number of at least five. The rules are if they send you a package, a quote package, an estimate, they have to give you at least five agencies you can drive to. Well, in Texas, we're spread out across Houston. There's two agencies here. As far as I know, I'm the only agency, the Credit Coalition is the only agency that does home visits. We're the only agency that will take you virtual or by phone. So MMI, Money Management International, they're a great agency. They have a lot of HECM counselors in their phone bank system, in their phone system from across the country. It may be quicker to be served by one of the national agencies like MMI that happens to be located in Sugar Land. Their home office is in Sugar Land, but they have agencies all across Texas and the United States, and they have multiple HECM counselors under their umbrella. Or you'll call somebody from the Dallas-Fort Worth area, one of the other agencies, and I'll share with you in your packet the list of agencies as of yesterday that do HECM counseling across Texas. But they also have to provide you nine of the intermediaries, the large national agencies, and they're all across the U.S. And so you'll have plenty to choose from. when you reach out to a HUD-approved housing counseling agency, you want to specifically request to talk to a HECM counselor, HECM, HECM counselor, or reverse mortgage counselor. You can also use that term. And then some agencies will just take your contact information and have a counselor reach out to you. Others will tell you you have to pay a fee to go ahead and set an appointment. And so again, every agency, they can do, thank you, Nia. They can, as long as they share with HUD how they market themselves and how they sell or don't sell their services, they have to make sure that they're providing that data to HUD and they follow what's in their housing counseling work plan. So HUD allows housing counseling agencies to charge for this HECM counseling. They can charge. And right now I'm hearing people tell me that they've been telling 200 over the phone, two and a quarter. I even had somebody tell me they're up to 275, 100, 275. Some agencies don't charge a fee. We happen to be an agency that we don't charge a fee for any of the services we offer, but we're very small. We have myself, I am the counselor, the educator. I teach the classes, I go out in the community and do presentations. So I'm just not sitting at my desk waiting for the phone to ring. Okay, next HECM, next HECM, next HECM. I try to work in the counseling clients as quick as I can, but most people have to wait out for at least 2 weeks, sometimes 3 weeks before I can get them on the schedule. So sometimes time is of the essence, and paying for a counselor may be something you choose to do. So with that said, um, you talk to a counselor. The counselor is going to do an intake, the HECM counselor. We are mandated by HUD to follow a protocol. We have rules we have to follow, steps we have to follow. And I'm going to be sharing with you in a little bit paperwork from handouts that I use in our packets that HUD has provided HECM counselors to share with our clients to help you understand the process outside of the counseling session or just outside of just asking questions. Having questions about a reverse mortgage does not mean you have to sit through a full HECM counseling session to get your answers. So if you're just for our agency, if you have questions, I'm here to try to answer them, not to tell you you have to be counseled to talk to me. Other agencies may have other ways they provide their services. But again, our place is to make sure that you understand the good, the bad, the pretty, and the ugly about reverse mortgages. And we're mandated to talk about other alternatives that may not be as costly. We're also mandated when you talk to that counselor during the counseling session, they are going to share with you other resources like the local area agency on aging for your county or the aging and disability resource centers, 211, United Way Helpline, agencies like Neighborhood Recovery. We refer a lot of folks over to you, Nia, for some of the things you guys are doing because that they may not actually need the reverse mortgage or want the reverse mortgage after they get their answers, their questions answered. So back to, and I lost your original question. Help
No,
me.
you were going through the process and you were talking about, they'll refer you to counselors and to find a counseling agency. No. At one point, I thought it was required that if someone went to get a reverse mortgage, that they had to go see a reverse mortgage counselor first.
To apply for a reverse mortgage, you
Hmm.
must have HECM counseling. That's correct. But not everybody's applying. Some people just have questions. So if you're just wanting questions, another thing that happens, we as counselors, you can't have your nephew Joey call and say, I need information from my great aunt for her reverse mortgage. We are not allowed to engage about you, or in this case, the great aunt. We're not allowed to engage about them without hearing that person requesting the information. But we are there to answer general questions. So if Joey, I don't know, I picked the name Joey. So if Joey calls and says, I have questions for my grandma, my mom, and my dad, whoever, about a reverse mortgage, if even if mom is sitting there, grandma or great aunt is sitting there, hey, let me hand them the phone and they can talk to you, Sherry. No, they need to contact me. they need to contact me. And they may hang up the phone and turn around and call. But the key is they have to reach out for me to provide um, precise information to them. And that is set up to make sure that, at least as much as we can, make sure that somebody's not coercing them to do this reverse mortgage. Now, if I don't see their eyes face to face, if I don't see them on a Zoom screen, if we're on the phone only, it's amazing how sometimes I can still detect that there's hesitation in the voice. There's still
Mhm.
hesitation in the questions. And so if I'm not comfortable that the person I'm talking to, if they're in the greater Houston area, within an hour drive of me, if I'm not comfortable, even if we're doing a counseling session, I can't issue a certificate if I don't feel that person is understanding what we're talking about. And throughout the counseling session, we ask questions. We're mandated to ask certain questions throughout, not like a test, but just to verify that we're getting our point across throughout the counseling session. And if a person doesn't seem to, like I just asked Mia, what were we talking about? If me was your income client, you'd say, oh, nope, not doing a certificate there. But if I didn't feel confident that the person was keeping along with me, or if it's a couple, only one person's doing all the talking and the other person's quiet in the background, or I can hear them saying, honey, you need to come back to the phone, then I know that I'm not counseling two people. I cannot issue the certificate. So it's important that you realize that counseling is required. Counseling is not to see how are you feeling today. Counseling is to cover the topics that were required per the housing and counseling protocol for HECMs. And to cover all the information that I have to cover in a counseling session, it usually takes me about 2.5 to 3 hours if I'm doing it by phone. There's a lot of information we cover, and the information we cover is going to be in the paperwork that as counselors we send out. So we take an intake initially, we take an intake, and we're going to ask you financial questions about, your if you have a mortgage, what you think the value of your house is, how much do you pay a month for your utilities, your debts, your bills, how many credit cards do you have? Not the names of the credit cards, not individual credit cards, but bundling them together. What are you doing with the money that you're planning on applying for? So I see. Thanks, Letitia. Can a POA attend on the behalf of another? If the power of attorney document, the signed durable power of attorney, is presented to the counselor prior to the counseling session, and the counselor is made aware that there is a durable power of attorney. We say durable here, not just a traditional, not just the regular power of attorney. And Nia, I know you guys have presentations about medical directives and PO power of attorneys and the durable.
Yep.
Um,
Mhm.
so I'll do a commercial for them. But if you have that, they need to let the counselor know. And HUD asks us as counselors, if at all possible, get the person in the counseling session also. The power of attorney can be there, yes, can be there representing you as a durable power of attorney, but they ask us to please get the person in. So sometimes we'll have somebody that is right now in a long-term care facility. The wife is in a long-term care facility, and the husband's still in the house, and yet they're both still on the loan. He doesn't have him. They have a durable power of attorney before she became incapacitated. If she is incapacitated, but the durable is kicked in, then all I need to do is place in my notes, Mrs. is at wherever she's at and not able to attend, but the husband, we have a copy of the signed durable power of attorney, and he is present for the counseling session. That can be done. But if she is up and talking and walking and just there trying to get her hip back in shape, then we need both of them on the call. If she's still able, HUD is going to asks us to make sure that we're counseling both if the one person is not incapacitated. If they're both incapacitated and they're at home, maybe they have 24-hour care and they have a durable, or they have a guardian, someone over them, but they're still at home and they're planning on aging in place. then yes, the guardianship documents or the durable power of attorney will have to be presented to the counselor before the counseling is actually scheduled on the books, or after it's scheduled, they won't be able to continue on until they actually have those documents. So the answer is, can a POA attend on behalf of another? The answer is yes, but if the person is not incapacitated, then we're gonna ask for them to participate too. How does a home equity loan differ from a reverse mortgage?
That was my next question.
They're both home equity loans. The difference is with a home equity forward mortgage, you have a monthly payment every month. And eventually that loan is going to be paid in full. You pay month after month after month, you have a monthly payment, and eventually that loan's paid in full. Whereas with a reverse mortgage, with a HECM, home equity conversion mortgage, you have a home equity product and there is no requirement to pay a monthly payment. Since you're not required to make a monthly payment, most people don't. They don't send any money in. They just let that balance grow, 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 grow. And eventually, because this is a rising debt, falling equity loan, the reason we say falling equity is because you're using up your equity as that balance continues to grow. So, and also there's difference between the home equity line of credit. With a home equity line of credit, it's usually interest only for the first 10 years. You can correct me if I'm wrong, Nia, but it's usually on those line of credits, it's interest only for the first 10 years and then principal interest begins. So it would be, again, a payment is required on a HELOC, a home equity line of credit. So that's and the difference also, other difference between the two, with a HECM, you have to be at least 62 years of age. On a home equity loan or a HELOC, I have to qualify based on my ability to pay that payment. I qualify for the loan, and it doesn't limit me that I have to be a certain, at least a certain, as long as I'm 18 in Texas, it doesn't limit me that I have to be at least 62 to get a home equity product or a HELOC product. But HECM, yes, you must be at least 62 years of age, both of you. If
And
no,
you can only take out a certain up to a certain percentage of your equity for a HELOC uh
or a home equity,
or home
or
equity.
or a reverse mortgage. Yeah, you're limited. Now, the HELOC up to 50% of the value of your home. You can't have any liens beyond that. Um, with a home equity loan, you can't exceed 80% of your
80%.
equity. And then with a reverse mortgage, as I said earlier, it's not based on a percentage. It's based on the younger of the two is your birthday, the 10-year treasury note, and the value of the home based on an appraisal. They put all that into an equation and it spits out an amount for principal limit. So the limits are what we see: the closer you are to age 62, the less money you can touch of your equity. The
Mhm.
older you are, closer to 100, the more is available to you of your equity. So the younger you are, when people call me, they're 62, 63, 70, and I say, well, you're on the young side. I'm not young, I'm 70. I'm not young, I'm 65. Yeah, as far as reverse mortgage goes, you're young. And then I always have to throw in, I'll always be young. And they go, okay. I said, look at my name. I mean, you said my name's on the screen. My name, I'm Sherry Young. After 49 years of marriage, I'm not changing it. So I'll always be young. Just heard my husband in the back. My mother-in-law told me that when she first met me, she had that phrase for me, and I thought she looked really old when I met her. She was older. She was a lot older than my mother. And so, I thought, okay, I'm not going to say anything. Sure, you feel that way. She goes, no, it's my name. I didn't even know Bobby's last name was Young. So, I couldn't fall for the joke because I didn't know the joke. But anyway, anywho, okay, so if no payments are
That's
made, how do you lose your home? You must keep your property taxes and insurance and HOA current. You must live in the home as your principal residence, which means you're in this house for more than you're not in this house in a calendar year. You have to keep on the house. So what happens is you usually get a statement every month. You get a once a month statement, and it's going to show you how much interest was added and mortgage insurance premium, the fee was added to your balance. And now your balance went from this to a little more. And then the next month it's going to go from this to a little more. So it's going to keep growing month after month after month. It's going to keep growing. But if I don't pay my property tax bill, let's say my property tax bill, I talk to a lot of folks that say, I am exempt. I am exempt from my property taxes. And I go in and I look at HCAD or Bexar County or Wells County, anywhere they're at. I pull up those records because that's public information. And I see, well, no, your taxes are in arrears. You haven't paid your property taxes in 3 years. They said, well, it's because I'm exempt. I said, well, you have an exemption, but you still have a tax. In this particular case, you still owe $1.98. You still owe $232 each year, just an amount. And if you don't pay that, the county is going to add that up. It's going to show that you're in delinquent status. So I say,
Oh, wow.
haven't you received a statement? Well, I receive letters from them, but I don't open it. That's usually what I hear. I receive letters from them, but I don't open because I don't owe anything. I said, well, yeah, you owe something. If you owe something and you're in a delinquent tax status, the requirement for the FHA loan is to make sure that when they do their application, the FHA underwriter, when you apply, you've been counseled, you submit your certificate to verify that you've been counseled. Your certificate's valid for 180 days. The certificate's going to say what day your counseling was, what day it expires in 180 days. It's auto-populated from the day of your counseling. It'll clearly state how long you spent in the counseling session. If they charged you a fee up front, if they're charging you a fee at closing instead, or if no fees were required. So it's going to have that on the counseling certificate. It's going to list your counseling ID number in the top right corner, and it'll have your name across the front at the top of it as the owner of the property, is the owner, you and your spouse, if there's two of you. Sometimes I have families that come to me, they're two sisters or two brothers or a sister and a brother. Or I've had a 90-year-old mother and her 72-year-old son together on a reverse mortgage. They both lived in the house. They were getting this reverse mortgage together. They were, it was their home together. So again, you don't have to be married to a person to be on the loan and be in the house, to be occupied the house together. But if you must be at least 62 years of age in any situation, you must be at least 62. Okay, so the question, I'm trying to get there about losing your home. So they take the application, the FHA underwriter. I was talking about I have a delinquency on my property taxes, even though I didn't think I owed any, I did. Or maybe once I turned 65, I'm in my 70s now, but once I turned 65, I filed for the 65 or older deferral, my property tax deferral. I had a delinquent status. Maybe I didn't pay when I was 62, 63, 64. Now I have this big balance. And I realized that, oh, I'm 65 now. I'm going to file for my over 65 exemption, 65 or older exemption. Plus, I'm going to file for my 65 or older deferral, property tax deferral. Now, all those property taxes that I owe that were in delinquent status are now going to be accumulating at a small percentage, 6 to 8% per year, depending on the tax district, will be added to my loan balance. But the school district, all those other taxing entities can't come after me to foreclose on my property for property tax purposes, because I have the deferral. So I'm protected. Yay. Until I pass or until I move out of this house. I turn it into rental property. I'm alive, but I turn this house into rental property. I'm going to lose my 65 exemption. I'm going to lose my deferral, and all those taxes come due and payable for all the years. All right, so now I'm just going to say I'm in deferred status. I'm 68, 69, 70, whatever my age is. And the reverse mortgage underwriter is going to look at your property tax situation. Well, in deferral, in the past 2 years, I haven't been delinquent because I've been in deferred. So they usually go back for the past 2 years. What status is your property taxes? Has your homeowner's insurance lapsed? Do you have insurance now? And if you had a lapse of your insurance policy in the past 2 years, or you've had continuous coverage. If you haven't had continuous coverage, or your property taxes have been late, then they could say, okay, because of the way your income's coming in, maybe you have limited income, they will put what's called a forced, I'm trying to, well, just not forced place policy, just had a mind fog. Life expectancy set aside, ELISA, LESA, life expectancy set aside to pay future property taxes and insurance out of the equity of your home. If they do that, they're going to take that tax, the amount of taxes, if you have any, on an annual basis, and your an estimate for your or what you're paying right now for your homeowner's insurance. They're going to calculate based on the youngest person's life expectancy using actuarial tables, and it's going to be a large sum of money. And so let's say that I am right now, I'm 70, I'm going to apply for a HECM. I've had my property taxes have been late in the past, or my insurance lapsed over the last 2 years. I just forgot to pay it, but it lapsed. And so now I was out of insurance for a while. Now I have insurance again. They're going to probably assign, it's up to the FHA underwriter, but they're going to assign that life expectancy set aside, which could be $60,000, $70,000 of your potential reverse mortgage proceeds. They're not going to let you touch it. And they're going to put that over in a set aside so that for as long as you're in your home until it runs out, when that tax bill is presented to the mortgage company, like an escrow account, when the tax bill is presented to the mortgage company, they will pay it, the reverse mortgage lender. When your insurance is renewed and the bill is sent to the reverse mortgage lender, the servicer that's taking care of the loan, they'll pay it. They'll continue on year after year after year, but depending on how much your bill is and how much it increases over time, you could be out of, this is ugly, you could be out of life expectancy set aside in 10 or 12 years. And
Mm,
if you outlive your life expectancy set aside, that means you're on your own for paying those taxes and insurance. In a time of your life, maybe you don't have the money coming in. You've been living on what you had to keep your life going. The loan's going to be called due and payable. If you don't pay those yourself, if the when and the life expectancy set aside is exhausted, if you outlive it, then those are going to be on you. I've had people come back and tell me, okay, I'm to the point I'm out of life expectancy set aside. I've lived a lot longer than I thought, or my insurance bill went way up and it ate it up quicker than it was expected. Now I have to pay it. So my answer to them is, do you have someone you can go to that can pay it for you? Do you have family members? Do you have a friend? If you take one of those high interest loans that they say will pay that for you, and they place a lien on your property, if they're placing a priority lien, a lien on top of your FHA loan, your loan will be called due and payable anyway. So and then you'll owe the folks that you took out the loan with, you'll owe your reverse mortgage loan, whatever that balance is now. The beauty about the reverse mortgage, let's say I don't have any negative, I still have money in it's time to pay off my loan, whether I'm going to sell the house or my husband and I both have passed away. It's time to sell the house. The kids say, the heirs are saying, okay, we're going to sell the house. The benefit of the reverse mortgage because of this FHA product, it is what they call, because it's a home equity loan, it is what they call a non-recourse loan. Non-recourse. Non-recourse means that the most the lender can get when the house is paid off is either the smaller of these two amounts, 95% of the new appraised value of the home at the time of payoff, or the loan amount, which was rising, rising, rising. The loan amount at the time of payoff, whichever is less, the smaller of the two. So if I owe more, my husband and I, our loan balance was greater than the house is valued at on the new appraisal, my heirs are not responsible for paying off that shortage, the difference between what the loan payoff amount was and what the house would appraise at. So let's say that we've had a downturn. I live over by Hobby Airport. I live in a neighborhood. We bought our house in 1984 before the economic downturn. And we were in our house 3 months and the economy crashed. You could not give my house away. period. No, people were walking away from their homes because of folks that had higher interest rates, and they didn't have jobs. Or their hours were cut. We just had that terrible economic downturn when the oil field economy crashed in this region, in this Gulf Coast region, Texas, Louisiana, Mississippi, Alabama, Gulf Coast region. And so I couldn't give my house away. I could have walked away and lost everything we put into it and get it foreclosed on, but that wasn't what we were going to do. We stayed with the house. So through the years, we've been here, 1984, we've been here that long. We've seen our values rise. We've seen our values go down. They find a burn pit across the railroad tracks. Well, down goes our home values. Then they realize, oh, that burn pit wasn't really a burn pit, a chemical pit. It wasn't really a chemical pit, so our values go back up. We've seen them go up and down roller coaster. There's some parts of the community right now, the greater Houston area, if you're in the greater Houston area, where the home values are just jumping, rising, 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 because they're building, building, building new construction everywhere. Maybe you're in that community where you have that super high home value now. The reverse mortgage, back to when the time comes to pay off this loan, your heirs or you will not be responsible for any deficiency, any shortage. That they may mean that they won't get any equity because there's none left, but they won't have to write a check when it's time to pay off the loan. They just won't get anything. And so that's a pretty and the ugly. You're out of equity, but you also don't have to write a check. If you had a traditional forward mortgage and you wanted to pay off your house, the mortgage has to be paid back if you're going to pay off your house. And if you were short, if there wasn't enough money in the sale price of the house, and you're coming out of pocket for the difference, but not with the reverse mortgage. It's a non-recourse loan. Yes, non-recourse, meaning you'll never owe more than the smaller of these two amounts, the actual loan amount, which is rising debt, or the 95% of the appraised value at that particular time. Not when you originally took out the loan, but the appraised value now, or at the time that the house is being sold or paid back. The kids also could just walk away, your heirs. They don't even have to do anything. They could say, never mind, we don't want the house. We don't want the troubles. They can do that. FHA allows what's called a deed in lieu of foreclosure, where the heirs can just sign the house over, but it's not that easy. Stuff. They make it sound so easy. Just sign it over. Usually, what I've seen in the past with deed in lieus, with clients we've helped with a deed in lieu, FHA wants to see, or HUD wants to see that they try to sell the house first. Put the house on the market, sell it, put it on the market for 6 months, and at the market rate, and see if you get any buyers. And if there's no buyers, then they'll say, okay, then let's submit all this information to FHA so that you can request that deed in lieu of foreclosure. If you're going to do a deed in lieu, the utilities have to be on, upkeep has to be kept up on the house. You have to continue to pay the HOA. If someone was paying to mow the yard, you got to continue to pay to mow the yard. So again, there's some things you have to do along the way in order to prep it for the deed in lieu of foreclosure. And it takes, they say, no less than 90 days. I haven't seen one take less than 9 months. But again, you're keeping the taxes going, you're keeping the insurance paid, you're keeping upkeep on the house and the utilities on during that process for a deed in lieu. But eventually, you'll sign documents to sign the house over. And so, you're not writing a check to sign it over, but someone has to be writing a check, or I guess I should change that, doing something electronically online now. So many people tell me they don't use checks anymore. But they're going to be paying some things to make sure that house stays in compliance so that the deed in lieu can be completed.
But what happens if the heirs just decide I'm not doing any of that stuff, just forget it? What happens then?
So what'll happen is the house
Especially
will get,
if they can't agree, if there are multiple heirs, and then one's is in charge of making sure all of this stuff is done, and then they all don't want to pay for it, then they all just decide I'm walking away. What happens? Or,
they
I don't
can
know
they can
anything.
walk away eventually. So letters will come to the house, to the estate of. They will request, if they know you contact the servers, say we don't want the house. We've cleaned everything out. I would say first, before you call them and say we don't want the house, You want to make sure your heirs put this in writing if you get a reverse mortgage, but ask them to go in and take everything out of it that they want to take out of it. Because if you think later they're going to go back and get your bedroom furniture, they're going to go back and get the jewelry from the hiding place in the house, once they call and say, we don't want this house anymore, most likely the servicer is going to contact a management company. They're going to go in and they're going to change the locks and you will not be able to enter the house. We've
How long
had,
does that take? Or
you
like,
know, it can take as quick as I've seen it go as quick as 4 months, as
mm,
quick as 4 months, because in the meantime, you're getting letters at the house asking you to communicate with the servicer, contact the servicer, the company that's taking care of the loan. They'll ask you to reach out to them online or call them or fill out a form and send it in. And if they can prove to the court that all of their mailings have not been responded to, that's all they have to do when they go to the court, county court, to request an expedited foreclosure. So they can request an expedited foreclosure, and that I've seen them as quick as 4 months from the death of the person when there's been no contact. So I'll just also bring this up. Let's say you have four siblings and one of the siblings has passed and they had four children. So it depends on, what the will, if there was a will, who did that person, who did your mama, your aunt, your uncle, your grandma, who did they leave the house to in their will, if they had a will? If they didn't have a will, if they didn't have a will, then you'll have to go. I'm not trying to practice law here, but you'll have to go through probate for the court to determine to validate the will. I guess basically is what's happening. Think about Howard Hughes. He had a whole bunch of wills out there. For those of y'all that remember Howard Hughes, everybody was saying they had the Howard Hughes will. I don't know which group ended up having the final will, or the actual will. But if there is a will, it's going to take time to go through probate. And maybe one of the siblings says, okay, look, I've got the money. I'm going to go ahead and pay off grandma's house, and y'all will settle up with me. All the siblings will settle up with me later. The reverse mortgage lender doesn't care who pays them. They just need to be paid. They don't care. And so what I've heard stories that the person who did the payoff was expecting, okay, they were going to settle up later, or that other heir was going to sign over their part to the sibling who paid off everything. And now it may not be the brother or sister. Maybe the brother or sister has passed, and now one of their heirs is saying, stomping their foot and said, nope, I want 50% of this deal. I want you to pay me in order for me to sign off. I need now X amount of dollars on top of what you did taking care of that house. Thank you very much for giving me that gift. But I want you to pay me now if you want me to sign off. And so I would just recommend this. Seek legal counsel before you do anything. If you, depending on your income, you may qualify for free legal aid through TSU, through the Thurgood Marshall School of Law, through University of Houston, through the law school at U of H Central, through the
oh, I'm sorry, HBO.
Lone Star Legal Aid. Also, you've got the folks over at the South Texas College of Law. They all have legal clinics, and so maybe you can find someone that at least talk to you for free. I'm not saying that they'll represent you, but at least talk to someone and find out what your legal rights are before you either walk away or before you decide to pay something when there's other heirs involved, to make sure that you will be compensated, or that you're not paying that for someone else, for an heir that pops up out of the woodwork you did not know about. And that's the one that has that appropriate document that says, oh, the house goes to them. And now you just paid off that reverse mortgage loan for them. So
Mm,
be real careful with that. But you don't have to do anything. But if you don't do anything, if your heirs don't do anything, eventually this house will be foreclosed upon. And even prior to the foreclosure proceedings, the management, the servicer, the reverse mortgage company will hire a management firm to go in and lock down the house, change the locks, and to protect the interest for FHA. That's their
Mm,
duty. So
wow.
communication is the key. Communication now on the other side, while I'm alive with a reverse mortgage, maybe I don't want to tell my kids, I don't want to tell them my situation. So I would suggest that for me to put it in writing, let them know so it's not a surprise 6 weeks, 2 months into it that I get this communication saying that I have to act or the house isn't mine. I thought, my kids may have thought mom and dad didn't have any financial problems. They were always buying stuff. So for us, for the grandkids, they didn't have any problems, but they didn't realize we were just living, nail to nail. But put it in writing so your heirs know what to expect upon your demise, upon your death, because we're maybe we're going to live a long time, but as of now, they haven't made anything that allows us to live forever. So that might come on Earth, live on it forever on Earth. Go ahead,
We've
Nia.
we've heard the bad and the reality. So what's the good? I mean, because
Okay.
none of that sounded
Okay.
good.
All right, let me talk about the good then. So let's say I'll share some stories of folks. I have some folks that are just living from paycheck before the paycheck's over. They're out of money and they have all this equity in their house. They don't want to sell their house. They love where they live. They want to stay here for their ideas to live in their house forever. People tell me until their feet first out. So that's their plan. Their plan is to live here forever. So if you can draw money out of your home and you're not worried about leaving equity or leaving cash to an heir, then hey, let that house pay you back while you're alive and in it. That's a beautiful piece. That's beautiful right there. Some of the reasons folks have given me the reason why they're doing a reverse mortgage. I had a woman who was divorced. She said she was divorced for many years, but she had the same furniture in her house. She never had the money to buy furniture, and she was to a point in her life where she was finally ready to leave that memory behind. But she did. She every time she walked in her house and put down her keys or put down her purse, she saw her ex's big chair and the couch that he sat on or laid on, is what she said, was always laying on. And so when she discovered she could do a reverse mortgage, that she can get money out of her house and spend it on what she wanted, change out her furniture, do what she wanted, she was a happy person. She said that it made her life full. She said she spoke to her children. Her children were not waiting for the house. They were not waiting for the house. They said, Mom, you need to do what you need to do. It's your house. I
Mhm.
had another person, she was in her upper 90s. She lived in East Texas. And this is one that I tried to do the counseling by phone and it just wasn't getting across. She was bedbound. She was homebound and bedbound, and she had um, children, her grown children and grandchildren. She had children that are older also because she was in her upper 90s, and so they would rotate through on the night shift. They would be there. One of the family member would always be there at night. And it got to the point where the grown kids were moving away, grandkids were moving away, the her children were getting older and they couldn't lift her anymore. And so they needed 24-hour care for her to stay in her home. She was not going to leave her house. She was not
Mhm.
going to leave. She didn't want to do a reverse mortgage because she wanted to leave the house free and clear to her children and then her grandchildren. And they had a family meeting and told her, we're not coming home. We all have our own places. We love you to death. But when you pass, we're done with this town. We're not coming back. And it took a lot for her to realize that in herself, that if she could do the reverse mortgage, she could free up the commitment of the kids having to come in and stay with her at night or fill in other shifts. She could afford 24-hour care and live at home and then have them come and visit, spend the night, do things with her instead of being their caretaker. And so
Mhm.
that was a blessing. She said, not only for her, it just took her a while to embrace the idea that she wasn't going to be able to leave her house free and clear. She could still leave her house to her children or whoever she was leaving it to. They would just have a lien against it. They'd have to pay off pretty quick if they want to keep the house. But in her case, At that time, she did a ladybird deed before we had the transfer on death deeds here, and so they were able to convince her that as soon as that deed moved into the person's who she left the house to, they were going to be able to sell the house quickly, or as quick as they could, without having to wait to go through probate to be able to get the authorization to be the person to sell the house. And so it worked out wonderful for her. She stayed in her house and lived for another 3 years into her 100s. And the family said it was a blessing all the way around. I've had a gentleman that said he wanted to go take a trip to China, and his wife said, "No way are you going to spend our savings on a trip to China." She didn't want to go, but they were a combined marriage. They had married later in life, and she had her own property from her previous life. They were living in his property in his home as their residence. So she said, as long as she had her own house to go to when he died, she didn't care where the house went because it's not going to her, it's going to her his kids, not her kids, his kids. So if he wants to use up his equity and go to China and go to Timbuktu and wherever he wanted to go, he is welcome to it. But as long as she could still age in place until the time comes when she was ready to move back into her other house that she shared that she shared with her prior life. And so that was a good thing for them. He was able to take his trip, do what he wanted to do. So other people it just frees up some money, just gives them some little extra. Maybe they want to, again, spend it the way they want to spend it. But I always caution, I'm not here to tell them how to spend their money. If they do draw down all of their funds, if you draw down all of your funds from the reverse mortgage, there's no one going to be standing on top of you saying, spend that, you need to save that. Remember, you're going to want this, you want to buy that. There's no one over you. And if you receive Medicaid, and you draw down more than a single person, you have more than $2,000 in your account the month prior to this month, you can lose your benefits. And then it doesn't mean that you can't reapply for benefits, but who knows how long that's going to take. And so you might be your insurance, your health insurance may totally change by you having traditional Medicare instead of Medicaid. Maybe you don't qualify for SNAP any longer, Meals on Wheels, certain things that you qualify for now that you won't qualify if you add extra money to your account. And so um, Letitia's saying, so it looks like the best beneficiaries of a reverse mortgage is someone who doesn't care about what happens to their home after you die, get money now. I won't say not care because the heirs can still pay off the loan and keep the house. So they're still going to be able to leave the house to whoever they're leaving it to. It'll just be up to the heirs to make the decision on how they want to, do they want to pay it off? Do they want and keep the loan? Do they want to sell the house and recoup any equity? So it's not taken out of the heirs' hands. It goes to the heirs. And
and
ultimately,
and 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 what does the person want? You, the property owner, what is it that you want to do? Regardless of thinking of, I'm not gonna say regardless of the kids or the heirs or what have you, it's you, the property owner. What's gonna be best for you?
and I've shared, yes, you're right. And Nia, I've shared in classes before when I came in person to talk. I think I did share because I was so traumatized by it. I was I did a home visit for a family. They had like 9 children, 9 adult children, and the parents confided in me, not their kids. And whatever you tell me or whatever my client tells me, I don't disclose to anyone else unless it's my son's beating me. Well, then I'm gonna report that. But or my kids are mean to me, I'm gonna report that. Um, and the reason I say that because I've had those confessions to me in the past, so I had to report. But with that said, they said that they were just living, not even by the fingernails. It was tough to even make ends meet because they have lunch every Sunday at their house for the 9 kids and then the grandkids. Everybody comes over. And she said, nobody offers to bring anything or pay anything. They just expect us to do that. And I asked her, I said, well, have you ever asked? No, we'd never ask. Okay, so that's why they were using the reverse mortgage. So they could continue with the lifestyle that they had presented
Oh,
for
wow.
themselves. And so I'm in the mush pot. The kids were sitting all around me. I'm in the center and I'm looking at the parents. My back was to the door. My back should have been my face should have been to the door in case I needed to run. It didn't occur to me. It didn't occur to me that I might need to run. But so my back was to the door, and the kids were sitting around me, and they were saying things like, "How could you do this to my parents? How could you do this to my parents? You're taking their house from them." And I kept saying, "I'm only a counselor. I'm not a lender. I'm here to the good, the bad, the pretty, and ugly." And then finally, I got to the point where they were a few of them were really um, hostile. They were quite hostile. And so I finally just looked at the parents, to both the parents. I said, "Look, I'm out here for this. This is, I'm counseling you. You invited your family, and we encourage you to bring your family in, but I'm not going to be treated this way. So I'm going to leave." And oh man, I heard some not so pleasantries as I was leaving there to good riddance, get out of here. And I'm thinking, dang, I'm here to empower everybody with understanding the good and the bad and to help their parents reach whatever steps they are. But the parents did not want those kids to know they were in a financial bind. So I got a call back, I'd say 2 weeks later, about 2 weeks, from the mother, father, and one of the children. They were on a three-way. They called to apologize that they didn't mean to, be so, the kids didn't mean to be so mean. Yeah, they did. Yeah, they did. And they asked me if I could come back out, but this time I'm only going to have four of the kids, not all nine of them. And they want to hear what's happening. And the parents talked to the kids and explained to them their situation. Didn't explain how dire it was, but explained to them that they're going to need to start bringing, helping feed themselves on the Sunday meals. And that in itself, the mom said, with the other kids, or the one daughter on the phone, but she said that with that in itself is going to help them a lot because that's going to free up their groceries and other things. So sometimes, the we don't want to share our situation. It may be just as simple as also without realizing that our kids, "Hey, mom, let me pay the light bill. Let me pay the water bill. Let me pay the homeowner's insurance." And then you guys can have a discussion on, well, who's the house going to go to? If I'm going to be paying it, if I'm taking care of all these bills, are you leaving it to me, or are you leaving it to Henry or Joette? Who are you going to leave this house to? That's a conversation between you and your children, or you and your heirs. But ultimately, you might have a resource. Also, there could be United Way of Greater Houston may have, or wherever you're calling in from. You could call 211, the United Way helpline. There may be resources in your community to help you offset some other costs that that you incur month after month after month. That could free up some money so that maybe the reverse mortgage isn't a fit for you right now. Maybe you want to wait till the economy gets better and your home values start rising again. I'm not saying they're not, but if you're thinking your home value isn't as high as it should be right now because of the economy, can you find other ways to take care of yourself? And then when the values of the homes are up higher, then apply for the reverse mortgage. There's opportunities out there for you. The question is, have you looked into them? Have you checked? And I'd say always start with 211, the United Way helpline. Give them your zip code. Ask them for the local area agency on aging and the Aging and Disability Resource Center. So AAA, not the kind that you drink, not that AAA, or the AAA that you tow your car, not those, but the area agency on aging, or the ADRC, Aging and Disability Resource Center. So again, ask them for those numbers for your county, and then reach out to them and ask them about programs and services that could benefit you or others that you know. You don't have to be calling for yourself. You can be saying, "I have a cousin, I have a friend, my neighbor," and you get the information, and then you can act on it. Yes, Aging and Disability Resource Center, otherwise known as the ADRC. Sometimes they'll go by the abbreviation ADRC. Thank you. Thank you, Nia. So if you don't have children or heirs, this could be an appealing option. This could be an appealing option either way, all those different ways. It's whatever works right for you. As they say, we don't see U-Haul trailers on the way to heaven. So you can't take it with you. So you're going to leave it to someone. Even even if you don't have close children or people that are heirs, you're still going to leave your house to someone or something. Have a plan for that. And Nia, this is a commercial for you. You want to talk about your classes that y'all offer, your webinars, before I show some handouts here?
Yes, well, on a regular basis, you know what? I wanted you to talk real quick too about the discussion we were having about the Todd right before this
Okay. All
presentation.
right.
So,
So we're talking about, if you have any heirs. So that's this good question leads us into that. So the question says, comment says, so if you don't have children or heirs, this could be an appealing option. You still leave your house to someone. You can still leave it. And in fact, now in Texas, we can do the transfer on death deeds, a TOD, transfer on death deed. With the transfer, and I'm not an attorney, so I'm not telling you what to do. I'm not walking through the steps, but Neighborhood Recovery has webinars on this. But let me just say this about the HECM. These are, again, pros and cons, pros, goods and bads. So I can set up and complete a transfer on death deed, and it has to be notarized. What I've learned, the notary must be from Texas. It has to be a Texas notary. I learned this. I don't see her on the call right now. She's already off, but I learned this from Marcella at a presentation, Miss Haggerty. I learned that, Nia, that
mm,
the notary must be from Texas, because if it's outside of Texas, or if you're using a service to handle your notary, again, the notary must be from Texas. All right. So you complete the transfer on death deed. You're going to assign a person or more than one person to be your heir upon your passing. They must outlive you by at least 120 hours. So it's 5 days.
right
Must
there.
outlive you by at least that. She told us 120 hours. So I say that now in my presentations, at least 120 days, the equivalent of 5 full days. And then they fill out to complete an affidavit that is then submitted to the courthouse. Now, your transfer on death deed must be filed before you die. Well, okay, so I put my daughter. My daughter doesn't own a home, and she's not going to be my executrix. I'm going to have my oldest son. Let's say I have my oldest son as my executor of my will. I'm going to have a will, and yet my will says my property goes to my three children split. But instead, I have a transfer on death deed all for my daughter. And so the transfer on death deed bypasses the will. It goes in front of the will. And so even though my will said my three kids get to split it, I have now put my daughter as my transfer on death. I filed it. She becomes the owner of my property. The dilemma with the reverse mortgages, let's say I had a reverse mortgage. Once I have that transfer on death, it's still my house until my husband and I both passed away. She's our transfer on death. And even though she hasn't a day number one, the deed is now in her name, but she's not the officially until from what I understand, she's not the official owner until she files that she's the owner. But for some reason in court records, she has to file her affidavit after at least 5 days, 120 hours, and my death certificate, my husband's death certificate. She has to file that with the court. Now the house is hers. Since she was a first time buyer, she didn't own a home. And let's say my mortgage on my house, my reverse mortgage was $80,000. We owed 80,000, but the house is worth 280,000. Knock on wood. House is worth 280. She could have qualified if her credit was right. She could have, if she wasn't already now the owner of our property through that transfer on death, we would have to go through probate. And yes, my will said it's going to go to the three, split between the three kids. Let's hope that the other two siblings would say, okay, you've been taking care of mom and dad. We're just going to sign our part over to you, daughter, sister, and you go ahead and get a loan, pay off that 80,000 plus, because now rising debt is going to take some time to go through probate. No transfer on death deed. It's going to take time to go through probate. It's probably going to have to let the reverse mortgage servicer know. My parents died. They do have a will. We have to go through probate. We need some time. They'll say, okay, you have 6 months to sell the estate. No transfer on death deed. 6 months to settle the estate. And the intention is to sell the house. Not to sell the house to the sister, but just to sell the house. That's our intention. We need the executor of my estate is going to say we need time. Family needs time to settle to go through probate, put the house on the market, and sell it. And so they say fine. As soon as you go through probate, when you complete your probate, you're going to need to send the reverse mortgage servicer, send the company a copy of the listing agreement. Okay, good. Well, month number 5 rolls. They give you up to 6 months to settle. Month number 5 rolls by, and the probate's not finished, or if probate is finished, the house is for sale, and the sister in this case hasn't been able to get a mortgage loan yet. So the heir, the person in charge of my estate, my executor of my estate now, has to request an additional 90-day extension. We had originally 6 months. Now he's going to ask for a 90-day extension. That gets out to 9 months after my husband and I both passed away. Daughter continues to try to get that mortgage loan. Maybe she had to clean up her credit. Maybe she had to take a home buyer education class. She had to do some things to qualify for the down payment assistance program to buy this house. Now it's not 80,000 anymore. Maybe it's 83,000, 84,000 because interest accumulates, right? So now she's finally ready to buy the house from the estate, but the closing is going to be after the 9 months after my husband and I both passed. My heirs can ask again for one more 90-day extension. That's going to get them out a full year to settle the estate and pay off this loan with permission from the reverse mortgage servicer. So now my daughter can buy the house from the estate if she qualified for the down payment assistance program. There may be dollars to help her purchase this house. She's buying the house now for $85,000, and she's getting some down payment assistance. House meets the guidelines for the city of Houston, Harris County, Fort Bend County, whichever program it is, in where the house is located. And now she becomes the owner. All right, she has a mortgage loan. Yes, she has a mortgage loan, but it's an affordable product because she used the down payment assistance programs. Okay, back it up. We put a transfer on death deed. She's the owner of my property as soon as we pass. She cannot buy the house from the estate using down payment assistance. It's already her house. So now she's going to have to qualify for some type of home equity loan. She's already the owner of the property. She's going to have to qualify for a home equity product. Again, that she's going to be at the restriction of, if it's a home equity line of credit, no more than 50% of the home value based on an appraisal. If it's a traditional home equity loan, no more than 80%. So the good news is the loan balance is small enough that it falls under that 80% rule for a home equity product in Texas. But she's not going to be able to use down payment assistance. It's already her house. The ugly side that I've seen, the person that received the house, their credit is jacked up, or they own another house. They don't have the money to pay off. They personally don't have the money to pay it off, and the house needs work. So if they're going to sell it, they're going to have to sell it for, the good news is she can sell it, but they're going to sell it for much less than the actual value of the other houses in the neighborhood. So, Nia, you want to add something about transfer on death?
Yeah, I wanted to add when we made the comment about verifying with the attorney that the regardless if the reverse mortgage becomes payable and due upon the
The
pass
death.
upon the death, regardless if they file the affidavit of death with the clerk's office, and they now have to work on paying that back. So
Yeah.
regardless of anything, it's due.
Yeah. It's
It's
due.
whatever
And
it's-
so, but remember when they call the loan due and payable, whether they call it due and payable because you didn't pay the property taxes or the insurance, or you didn't pay your HOA, or you moved, or you didn't sign a letter saying on an annual basis that you were still in the house, go on and type it in that I'm still residing here as my principal residence. If you don't do that recertification on an annual basis, they're going to call the loan due and payable. Now, the problem when they call the loan due and payable, they add some extra fees to the loan balance because that's extra work they have to do drawing
Ooh.
those documents. So drawing those, so you're going to have a little extra in fees added to your loan balance, but you can call them real quick. Go, oh, wait a minute, I'm here. I didn't realize that. I thought it was a piece of junk mail, didn't even open it. Or they say, well, we emailed you. Well, I don't use email. The email that you have, I don't use that one. We don't use email anymore. Okay. Then you sign the form, you send it back in, you either scan it, mail it, however you get it back in, and then okay, we resend that. We're not calling the loan due and payable. But again, when they call it loan due and payable, they're not going to foreclose on you tomorrow. They're going to give you time to react to and tell them what you're doing. Okay. Oh, well, okay. So I didn't realize I owed property taxes. I thought my tax, I'm going to pay that real quick. And they'll say, no, we already paid it for you. Now you need to pay the reverse mortgage lender back. And once they receive the funds that they paid on your behalf, then you're back owing them zero on those property charges, and the loan's not called due and payable. So they do give you time to take care of it. But if you don't answer your mail, then they're going to send someone to door knock. They usually put if you don't answer, which you look through the door, I'm not answering. They put a note on the door to please contact the servicer at this number. If you don't contact them, then they're going to call you again. They're going to request that expedited foreclosure. And it could be within 4 months of this period of time, within that first 4 months, you could be losing that house to foreclosure. So communication is the key. If you have to, one thing also good, FHA requires, let's say they fronted on my behalf that insurance bill. They want to be paid back what they paid on my behalf. I have to have my own insurance now. But whatever they fronted on my behalf, they can put me in a repayment plan over time. They'll try, can you repay us after 12 months, repay us over 36 months? Can you repay that back over 60 months, over 5 years? They can put you in a repayment plan. So again, it's not just do or die today and tomorrow they foreclose. You do have time. These are judicial foreclosures in Texas. They have to go to court to request the foreclosure.
Mm.
All right. So are HELOCs the best service now for using equity in home? I can't say that because it depends on your situation. HELOC is usually interest only for the first 10 years if you borrow it down. With a HELOC, they can close your HELOC at any time. If they feel the lender can close that, they may not have all the money you thought you were going to have available to you, and then now you need to pay it back. So I would say that's a question to ask the lender of your choice. We always ask folks to talk to the lender before you make a decision. Talk to more than one, talk to two, talk to three. Start with who you have a banking relationship with, is our motto at the Credit Coalition. Start with who you have a banking relationship with, find out what products and services they offer. If they don't offer that type of product, ask them who do they refer their customers to, or members, if you're a credit union, who do they refer their members to? Yes, ma'am.
Because not all lenders do reverse mortgages, right?
Oh no, and not all lenders
Yeah.
do HELOCs, and not
Yeah.
all lenders do heck reverse. Sorry, not all lenders do home equity products. So again, you want to find out which product is best for you when you talk to them. Maybe right now you're on the young side of the reverse mortgage, or you have a sizable payment. If you still owe on your mortgage, there may not be enough money in the reverse mortgage for you to get money out. All your funds may be going just to pay down your current debt load. I just got off a call with someone that uh, after the lender did the calculations, even with negotiating down the fees as low, I've never seen those fees that low, the fees that are negotiable. I've never seen fees that low. He was still $10,000 short. That means that if he wanted to do the reverse mortgage and pay off his $115,000 mortgage, and then he had a second lien of about another $8,000, paying that off and financing his fees, he'd have to go to closing with $10,000. He didn't have $10,000 to go to closing with. So the reverse isn't going to work for him. Not now. Not yet. He's going to have to continue to pay on his mortgage, get that balance down lower, or his home value needs to go up higher. So again, remember the reverse mortgage is dependent upon the home value. They have not done an appraisal. So his house could appraise more, could appraise less than the estimate. But if it appraises less, he's bringing a bigger check to closing. If it appraises more, he might not have to bring any money and receive some funds at closing. It's just every scenario is different. And when you talk to a loan officer, if the loan officer doesn't want to give you, back to the beginning, if the loan officer does not want to give you an estimate, many of them say, well, you need to talk to the counselor first. The counselor will. We don't know the lender's numbers. We don't know them. We're going to ask you to ask the counselor for what's called a counselor access code. And that way we can pull down a few of the documents that we can see what the lender is saying they're trying to sell you today or whenever you talk to them. And then we'll provide you education numbers as a counselor, and then we'll also put their numbers, a couple of their numbers into the equation and see, how their numbers are different from the education numbers we use to give you more ammunition to talk to that loan officer again. Okay, loan officer, now I know that the margin, you determine the margin. It's one of those items that can be different lender to lender. I'd like my margin as low as possible. Or lender, I know that you are your origination fee. The FHA allows there's certain fees that they put a cap on, and so FHA says they cannot charge you more than X. And to determine that X, it's 2% of the first 200,000, and then 1% of anything over that with a cap not to exceed $6,000. They can charge you less. So if they charge you less for that origination fee and less for a margin fee, then you're going to get more money out of the reverse mortgage. You'll get more money out of it. You'll be able to benefit it more. But again, it's rising debt. It continue to rise. That debt will continue to rise over time. Um, Sometimes title company fees can be negotiable. I just spoke to someone who is she's in East Texas, and their survey is a meets and bounds survey, which would have been about $3,000. But because they knew someone who knew someone that knew this family who owned the appraiser, I'm sorry, surveyor. The survey was normally about 3,000. They were able to get the survey at 2,500. So the family negotiated, not the reverse mortgage lender, but the family negotiated and got that fee a little less. The reverse mortgage lender is not in control of third-party costs, title company fees, surveyor fees, appraisal fees. They're not in charge of those, but they're going to give you an estimate when you talk to them on what your finance fees will be and if there's any out-of-pocket costs. For a reverse mortgage, if you don't use the credit coalition, you will most likely be paying an out-of-pocket for a counseling fee. And no matter who you use, you'll probably be paying out-of-pocket for the upfront fee for the appraisal. That goes to the appraisal firm, not your lender. Okay, so let's see. Is there a side-by-side document that shows major components of these various loans and pros and cons? Not so much I don't have anything pros and cons, but what I am going to show you, since I have a little bit of time, I'm going to share my screen, okay?
Go ahead.
Okay, so what I have here, and I know we looked at these earlier, and they're quite, I have this on 150%. So if you're looking at your phone, this is tiny. But these are these handouts you'll have. If Nia hasn't sent them out to you yet, you're going to receive these. So there's 22 pages in this initial packet. What I did here is I pulled from the packet. You see it has a number 4 in the right-hand corner. That's because this is the fourth part of the packet I send out, this portion of it that I send out to my clients for my pre-HECM counseling packet. HUD requires HECM counselors to gather data from you, do an intake, and build a packet that's specific to you and your circumstances based on what you share with the counselor. And so what I do is I have a section of HUD handouts. And so these come directly from our HECM counseling protocol, from our protocol. And you'll see it says attachment B1. And if we look, and it says here from the handbook that was updated in April of 2024. Before this, it was updated in September of 2019. They don't update very often. But this is preparing for your counseling session. And this is a document that I, as a counselor, we are mandated to share with you, but also your loan officer shares this with you, these first few pages, and tells you what to expect from a counselor. So you've got, how the reverse mortgage works, cost to obtain the HECM, impact on tax and social service benefits. So remember, I talked about this. It's going to be important for you. I'll just read you real quick. Reverse mortgage loan advances are not taxable, do not affect Social Security or Medicare benefits. However, you must be careful that any loan proceeds you retain do not exceed the monthly liquid resource limits for SSI and Medicaid. You may want to consult a financial professional for additional information. So remember, if you have more than 2,000 or 2,500 if you're a couple in your account the month prior in your bank account, you will lose your benefits. Your reverse mortgage proceeds are not considered income, but they are considered asset. So remember that. We have to talk about alternatives. You can go to the National Reverse Mortgage Lenders. Your PDF that you're going to receive from Nia is going to have these live links. So lots of information here. Next one was important information about home equity conversion counselors and other counselors. And so again, let you know what we're required to do as counselors, that we have to talk about the type of costs required for the reverse mortgage and the HECM, as well as proprietary products. Proprietary products are the private market. I don't do counseling for the private market, but those are for if you have a house valued at a higher than $1 million too. The reverse mortgage proprietary loans are available to provide a little extra money. The problem is they don't have the FHA protections. I just know that the interest rates are quite higher. They have greater equity depletion because their interest rates are so much higher. The credit line stops at a certain amount, and the lender can just call the loan, just close out whatever credit line you have and not let you borrow more funds. Again, it is sometimes for a short term, it might be beneficial because you get more money. Let's say I just need this money for a year because I'm going to sell my house in a year. In that case, the proprietary product might be more beneficial than the HECM, because again, you can get more money and more proceeds, but you don't have the same protections. And so we talk about the costs that can vary from lender to lender, which we already talked about today, and the maximum amount HUD permits lenders to charge. Some lenders were very upset that counselors would tell a person, okay, that's a negotiable item. That's a maximum allowed by HUD. You can go in and you can go back and ask them for more. And the lender would say, no, you're doing my job for me. You cannot talk my numbers. And finally, HUD came forward to say, okay, here's this form. We're going to present this, share it with all your clients so the client can't be bullied. That we are allowed, and the counselor can't be bullied. We are allowed to share this information with our clients, not to say, ooh, that's way too much, or ooh, you should get that for X amount. No, but to say, okay, this is an item that could be negotiable no matter what the amount is. See if you can get it lower. I mean, that's it. You don't want to pay more for it, but see if you can get it lower. We have the steps in the HECM process. So we have a handout for that, from the application to the processing to the closing and after closing. Your obligations as a HECM borrower. Again, all of these documents HUD provides us in the protocol booklet. Counselors aren't required to share it, but I think why reinvent the wheel? These are great. This is great information. So your obligations, paying your property taxes, paying your homeowner's insurance, review your loan documents, make sure your statement says what it should say. If you still have a line of credit and all of a sudden it says zero or a negative, that means they paid something on your behalf. You'll probably get that letter called due and payable real soon because they fronted something on your behalf. You need to contact your insurance carrier right away, your homeowner's insurance, your flood insurance carrier, your windstorm, if you're in a windstorm area, and make sure that the updated policy includes the mortgagee clause with the reverse mortgage lender's name. Mortgagee clause. They're going to ask you for that. When the loan comes due and payable. So lots of information here. Some frequently asked questions starting on page 11. I give this out because there's no way I can think of all the questions you might ask. So sometimes if you see a question asked, that'll trigger more questions in your mind. So again, that's why we provide this. And Let's see what else here. Okay, how you can access your home's home equity with a reverse mortgage. The payment options, different ways you can get your money is not all lump sum. Some people like to take a little bit at a time. As they say, how do we eat an elephant with little bites at a time? You might want to draw money from your line of credit in Texas. You must put your request in writing. They will not provide you with a checkbook. They will not provide you with a prepaid debit card to load. Nope. In Texas, you have to present a form that the servicer provides you. You fill it out, you send it in, whether by mail or email, scan and send it in, or fax if you still use fax. And once they receive the request, then they have 5 more business days, up to 5 business days to send that request money to you. So you can't expect, I would never in Texas, I would not expect that you call today and say, hey, I need 5,000 out of my line of credit, loan officer or reverse mortgage servicer. And they say, put it in writing. Okay, I'll put it in writing. I'll get it to you today. Most likely you're not getting it tonight. They're going to have up to 5 business days to send those funds to you. So you just want to make sure you give yourself time. You're going to have that time frame to receive the funds. And then once you receive the funds in your account, your bank or credit union might place a hold on those funds. If they wire it to you, your bank or credit union may charge you a wire fee, and so will the company sending it to you. But if they do an electronic deposit, they send it to you electronically, your bank or credit union might place a up to 9-day hold on that. So you need to contact your bank or credit union and let them know you're expecting these dollars from whoever you're expecting them from, and ask that banker, when will I be able to touch my money? And then they'll tell you what their policy is on holds if you don't already know. But I'd say even if you know what your bank's policy is on hold, call the bank or credit union, let them know you're expecting a deposit, and just let them know it's not fraud. It's coming from XYZ Bank. It's my money. It's coming. I'm expecting this. And then they'll tell you how long they expect the hold to be. You can take a monthly payment plan. Some people benefit from a monthly payment plan, X amount of dollars every month for as long as you remain in your home. That may be a beautiful piece for you. But I just had someone, her monthly check was going to be $78. She said that wasn't worth it to her. She wanted to leave it in line of credit and take it out as she wanted it. All right, let's see. I also have, I put in here Texas Proposition 5 from 2013. We Texans voted to allow the reverse for purchase product. We've been talking about a traditional reverse today, but you can also use a reverse mortgage to buy a home. If you're going to do that, if you're going to use the reverse mortgage to buy a home, you're going to have to put down about 55, 60% down. It's a huge down payment, and the down payment must come from your own funds. It cannot be from borrowed funds. But whether you do a reverse for purchase, a reverse refinance, if you already have one, because let's say the rates are going to be better in the future and you want to free up some money, get some more money out of your reverse, it's a possibility, or a traditional reverse. Texas requires Exhibit A to be signed. This form, it's the 12-day disclosure rule that requires all reverse mortgage applicants before you close on your loan. This document must be signed and dated by all persons applying for the reverse mortgage at least 12 days before your closing. This form, when you get back in your packet on page 16 of 22, it is the important notice to borrowers related to your reverse mortgage, all the different ways a reverse can get foreclosed on in Texas. This is Texas specific. This Exhibit A required. Most lenders today are providing this form in your application. This form will be double spaced, size 14 font on their letterhead, but at the very bottom of the form, it's going to have a signature line for anybody on the reverse. You must sign it at least 12 days before closing. If you do it in your application, you're probably not closing for another 60, I'll say 45 to 60 days in the future. So you'll be well within the time frame. I give you a copy of a sample certificate. It's actually on 8.5 by 14 page. Now, counselors. So Nia, when you said you saw those counselors, here's the dots. You have the Houston area, and you have these are in Texas. This is it. And so I printed this out yesterday. It has the Credit Coalition twice. So because I have two different HUD numbers, one from a HUD grant that we received in the past through HOPE, Housing Options Provided for the Elderly, as well as just the agency ourselves. We both do HECM counseling because it's me. Then you have credit.org. They're out of Arlington. You've got Dallas County Home Loan Counseling Center. They, as far as I know, they only serve Dallas County, but it's worth a question to ask them, a phone call to ask them. You got Housing Opportunities of Fort Worth, Money Management International. This is the Houston call center. And then Money Management International, their national call, the same phone number for both. Same phone number. They just have the same like the Credit Coalition. So these are one and the same, just two different agency numbers. And then you have Navicor out of Dallas. So we have one, two, three, four, five, six. Six agencies across the state. That's it. But there are other agencies across the country that do HECM counseling. I would just suggest that if you're going to call and whoever you're calling, let them know where you live. You want to know what do they charge and how quick can they get to you. And also ask them, can they be paid at closing? If you close on, when you close on this reverse mortgage, can they get their proceeds at closing? Some will say sure, but they're taking the risk that if you don't close on the reverse, they're going to bill you, and then it's going to be up to them to collect from you. But some agencies charge right at the beginning. When they make your appointment, they charge. And others, like our agency, we just don't charge at all.
What's the
All
fee
right.
range that people should be aware of if somebody does say, "Hey, we charge a fee"? What's the range?
I'm hearing from 200 to 275.
Okay.
And usually on the estimate forms that your loan officer provides, they're still saying 125,000, 125, $125. I haven't heard any agency saying they're still charging that little. But again, you don't know if you don't ask. And if you're of lower income, ask them if they have a sliding scale. Can they charge you less? If they do charge, can they charge you less? All right, I am going to, I know I'm almost here for you guys, but I just want to show you something else that you're going to be receiving from me. I have you seen your credit report handout? And this is 6 pages, but I give you, because the reverse mortgage, they will pull a credit report. If there's two of you on the loan, they'll pull it on both of you. They do pull credit scores, but these are not credit score driven, but they are credit driven. They want to make sure you pay your bills on time. They want to also make sure there's enough money coming in the household. They're going to verify your income, something your counselor won't do. We'll ask you about your income, but your lender will verify your income, and they will verify that, and they will determine, the FHA underwriter will determine that if you go forward with a reverse mortgage and they do not place a life expectancy set aside, then they'll need to make sure that there's enough money coming in the household to keep all your bills, taxes, and insurance, HOA paid on time. That's what they're doing. They do a financial assessment. So I provide you information on how to get your credit reports for free. Um, Tell everybody, go to Claim It Texas if you haven't yet. It's on page 2 of the second packet. Search for unclaimed property. If you're in Texas, claimittexas.gov. We do this in our classes. We do a financial homebuyer education class for free. It's a homebuyer education series. But we have everybody for homework. Check their Claim It Texas. And if you've ever lived in a state outside of Texas, go to missingmoney.com. It checks for unclaimed property. Free, and I can't say it again enough. Free. You do not pay anybody to find this money for you. Give you the order form if you like to order it by mail. All right, and then I have one more little piece that I give everybody, and that is how to do your own credit monitoring. If you're not already seeing your credit reports, and a score, a FICO score. Let me see if I can do my share again, one more, and then we're going to be ending. So Nia, I keep giving you other names. Nia is going to share this with you also. It is a handout that we use in our classes to let people know that they can ask for and do their own credit monitoring through each of the 3 bureaus. Actually, Equifax uses myfico.com. Sure, you can pay a fee, but these ways you can do it for free. and see FICO scores and a Vantage score through TransUnion. But you can see a FICO score as an individual FICO, consumer FICO score, not the score your lender pulls. We don't know, none of us know which score the lender pulls. And I'll just end in this. If a lender or if a credit score is pulled, which is the most important score? A credit score is pulled. Which is the most important credit score? Can anybody tell me? Put it in the chat. I know it's a lot of stuff here. Anybody can, if you're still on, put in the chat or unmute yourself. Is there anything?
Middle number.
Middle number. Okay, that's a good answer and a good number there. 875 is a high number, but no, the answer I'm looking for is the one your lender pulls. That's the score that matters. That's the most important score, not the one that we see as individuals, the one your lender pulls. And we don't know which version they're pulling. So, but if your credit reports is correct, everything on there is truly yours, your score is going to be what your score is, no matter which model they pull. So the question about
Not
is there.
not Credit Karma.
Well, Karma's doing a Vantage model, not a FICO.
Oh,
And if you look at my form again that I had on the screen just a minute ago, if you look at that form, we give you TransUnion. When you go directly to TransUnion, they do daily monitoring, and they also use a Vantage model. But credit wise, with Capital One, you don't have to be. I'm not a commercial for Capital One, but the free credit wise, you don't have to be a Capital One customer. You can do free score monitoring. They give you a FICO 8 and a TransUnion score. So you still get a TransUnion score with FICO, but with Karma, you get a TransUnion and an Equifax score, a Vantage score. So you can see how they vary. I would just suggest pull the scores on the same day. Pull them on the same day. So, but that doesn't mean that each of the bureaus have the same information. So that's a whole other class in itself. So I'm not gonna take you up on there. But the question, if you talk to a loan officer or a housing counselor, you will receive a form that lists the different loan products that they're selling, and it'll show you their numbers across the page. Yeah, so it doesn't say pros and cons. It just says that this is what they charge. This particular
Mhm.
product, this is what you get. So again, those are things that we counsel with. That's what we want to know, the lender's numbers, and then we give you education numbers to compare. Okay, let's see. Is there side by side? So that's the side by side document. It's called a loan comparison form. Letitia, if you're still here, there's loan comparison. I think, yeah, she's still there. So that's what your loan officer is going to provide you with their different products that they're selling. And so will the counselor. Do you have any other comments or questions? I can't believe we went over.
Well, no, I don't. There are no other comments or anything. The folks at Thanks a Million for all the information. A brain full and a mouthful. Miss Leticia said so.
I am.
Indeed, it was. And I don't remember it being this much information before. Before, I think we were done. I I don't know why I didn't remember some of this stuff, and I don't know
Oh,
why, but some of
oh,
this I really did
and
not
and
remember.
and I
So,
don't. Sometimes I've been asked to talk from a PowerPoint. I don't. I'm just not a PowerPoint talker. So
oh, that's okay.
yeah. So, but the materials you guys are going to get are going to follow up your reading. If you like to read, you'll have information to read, and you have our contact information. If you want to call Nia, email her, and if you want to get a question to me. Again,
Mhm.
I'm a little hard to reach. I do presentations. I teach Tuesday, Wednesday, Thursday nights on Zoom. And
The team of
I'm a team.
one at Credit Coalition.
I do have a wonderful assistant, Miss Doris, with me 3 mornings a week. She answers the phone and just lets people know, well, I know you left a message 4 times. She's going to call you back eventually. So I stopped promising I'll call you back in 24 hours. No, but usually within a week I'll call you back. And let me know if you're calling and just let me know that I met you. I didn't actually meet you, but that you were here in the class I did with Nia. And I'll call you back as quick as I can and try to get your answers for you.
Yeah.
Okay.
So, really quick, we were talking about the transfer on deaf deed. We are hosting a transfer on deaf deed clinic in the Northeast Houston area. We're going to be at the Hobart Taylor Community Center that's on 8100 Kenton Street tomorrow, as a matter of fact, from 10 to 12. And it's a two-part transfer on deaf deed clinic. So it's the information session tomorrow, and then the opportunity to set your appointment to come in to actually meet with the attorneys and have them review your documents with you on Saturday. So you have to come to part one in order for you to attend part two. So also next month, the fourth Thursday of each month, and I like to do the reverse mortgage presentation prior to doing the foreclosure presentation. So Lone Star Legal Aid does the home mortgage, home equity line of credit, reverse mortgage foreclosure presentation the fourth uh, Thursday of next month. And I don't have my calendar in front of me, so but I will include the calendar for our June
25th,
presentation so that
maybe?
you'll see it.
Maybe
The
it
25th.
might be 25th. Yeah.
Yes, yes. So that'll be at 1 p.m. on Zoom. Transfer on Deaf Deed will be in person, but um, just so that you know, you'll get a little bit more information and details about the what that foreclosure process is like that she had talked about. Or if you have questions or some kind of concerns of how reverse mortgage foreclosure works, the attorney will go over, what your rights are and the legal processes and things like that. So definitely tune in for that. But I do like to have this presentation before that one so that you can kind of get the before and then the after kind of thing. So um, with that being said, this was a lot of information that's going to be covered. I did not hand out your handouts intentionally beforehand because I like them to pay attention to what you're saying, because otherwise people will start flipping through pages, or I don't see this, or I didn't get my copy, or where's this on the page and I don't see this. I want them to focus on everything that you're talking about because I knew this was going to be a lot of information. So at least now they can go back and watch the presentation and have the packet in front of them as you're going through it now because they've heard it already, but now it'll be easier to kind of follow along with you. So I did that intentionally. So don't think I forgot or anything like that, but you all will be receiving a copy of this recording so that you can go back and watch all the handouts that she talked about, the different resources that she listed, the website with their links. I've been kind of taking notes and jotting messages down. So as she was talking about it, those links are going to be included on your email that I send out to you all as well. So it will be posted on our social media pages. It'll be posted on our YouTube channels. So please make sure that you go back and you watch and you watch again and you watch again, forward the information, share it with your neighbors, with your relatives, and most of all, just communicate with your family. If this is something that you're interested in, may or may not be interested in for whatever reasons that you have, please talk to a counselor. Don't go into this kind of doing your own research and thinking that you're just going to call some 1-800 number or some random person offline. Do your due diligence. Talk to a local counselor. Even though she says that folks are available across the state, I'm still recommending that you talk to somebody within the state, even if they're in Dallas, because they are familiar with how things work in the state of Texas. It's not just some kind of blanket statement, you know, uh, that some folks put out there over social media, what have you. Talk to somebody within the state that's familiar with this. We will be having another Todd clinic. We've had two this year so far. The next one won't be until sometime in the fall, but I'm not sure which area around the city we'll be at yet. That'll all depend on our funds availability as well as the location um, that would be willing to host us at another spot somewhere around the city. So yes, we will definitely do another one, and I will keep you posted on the schedule in the fall when we have those. So I'm going to try to have at least two more in the fall. So stay tuned for that. But if you guys do have any questions about any other presentations that we currently offer, any questions about this presentation, then please feel free to reach out to us. There'll be a brief little survey link that pops up on the screen. If you all could just take a moment to answer the survey questions and just kind of give us a little feedback on the information that you all received, if it was beneficial to you, um, and if it was helped answer all of your questions for you. So thank you, Miss Sherry. Appreciate it. You've been doing these for us for quite a few years now, and I love it, and I thank you very, very much. Again, one of the few one of the two. I must say one of the few now, one of the two reverse mortgage counselors in the city of Houston or in Harris County that's available to you. So thank you very much for taking your time out because I know that you've got a lot on your plate. So I really appreciate you doing this for us. So without further ado, I'm going to give you guys the remainder of your afternoon back. I know we're over a little bit, but we want to thank you all for showing up this afternoon. You all take care of yourselves. You stay safe, and hopefully we will see y'all again next time. Thank you very much, Miss Sherry. Yes.
Bye, everybody. Bye. Have a great day.
All
Bye.
right.